The stock market is right at its major resistance level yet again. And a lot of people are looking at this price action and saying, you know what? It's time to play the breakout. But I'll tell you, trying to play the breakout on SPY right now is one of the most useless trades in the market. In this video, I'm going to go over the two main events that are completely preventing a full-on breakout in the market right now. Make sure to stick with me towards the end of today's video. We have two very important events to talk about and some other important things that you definitely will want to know about, especially for the market right now. So we're not wasting any time either. So let's get right into it. So the first thing I want to talk about, of course, is SPY. You know, we're right at this major resistance level yet again. It's a detrend, I guess you could say a descending channel. Basically, what we're constantly seeing is lower highs time and time again, right? And historically speaking, we've seen many rejections off this upper resistance level. At the same time, unfortunately, we are seeing lower and lower lows, time and time again. But at the same time, at least the lows, that lower support level has been holding up very well. So we basically just been bouncing back and forth between this upper resistance level for over the past year now, and everyone is wondering, when are we going to see a full-on breakout out of this range? And we're very, very close to actually seeing a breakout right now, but there are just a couple things that are really fighting against the market behind the scenes. So if we look at the stock market over like the past couple weeks and months, it has been pretty good. We've seen a lot of stocks move to the upside in a pretty big way, especially some of these powerhouse market moving companies like Apple, Tesla, Amazon, and Google. Tesla reported earnings that brought in some extra bullish price action, and we've just been seeing a lot of, bounces off support lately, which is a good thing to see. But one sign that has been very alarming to me is when we look at some of these companies, like let's say Netflix as a first example. Some of these runs over the past, couple of months are starting to get pretty scary. For example, if we look at Netflix from its low to its price right now, Netflix, the multi-billion-dollar company, is up 125%. Yes, 125% just over the past couple months. And, that is somewhat scary to see because it's such a large pop up. But I guess you could say justifies this type of move a little bit more is that, Netflix fell from $700 all the way down to $170, basically from the beginning of 2022, or you could say the end of 2021 until June of 2022. So it's like we've seen such giant drops over the past year, but at the same time, over the past couple months, we've also seen some very serious uptrends. And, as we all know, like the market goes in cycles and it's like, it'll uptrend for a little bit, but, that party can't last forever. And like when I look at some of these most popular tech stocks, like for example, Nvidia, I know a lot of people like to trade this one. When you look at Nvidia from its low to its high, this thing's up around 85% or so just in like the past 3 months. And like that's a very, very big move, especially for a company of this size, especially in that short of a time frame. So it's like we're at a point right now where it's like, in the grand scheme of things, like if you were to look at Netflix or Nvidia on like a max weekly chart, you'll say, you know what, the stock is still kind of low. But like when you zoom in a little bit and you look at it over the past couple weeks and past couple months, some of these stocks are actually getting oversold. You know what I mean? So it's like we have to be careful right now because especially when we're at such a crucial resistance level on SPY overall, some of these market moving companies like Nvidia, like Netflix, like Tesla and Apple and Amazon, they have a direct influence on the market overall. So if we start to see them pull back and just normalize a little bit, that'll be a big fighting force against the market. We really have to keep that in mind going forward. So definitely keep that in mind. And another thing is that while the market is, it's doing okay in the short term, over the past, past couple of months and past couple of weeks, we've seen some stocks do very, very well. But like over the past 1 to 2 weeks, the stock market's been pretty flat. You could say that. But in other areas of the market, we're actually seeing some really good uptrends, like especially with gold and some other commodities. And we are seeing a lot of money flowing into that area of the market, and that's worth noting. And, gold is not the only commodity out there, obviously. Oil has been a highly followed commodity as well over the past couple years. And I brought this up in a couple of videos ago, but basically we're getting to the time of the year where gas prices and gas futures especially tend to rise to the upside. So we could see between like the first 15 to 45 trading days of the year, unleaded gas does do pretty well on average. So, with that being said, there's multiple ways to capitalize off this. Officially, you would want to go to RB futures, but at the end of the day, it moves in a very, very similar way as crude oil futures. So they go hand in hand. But mainly when you're looking at, gas prices, a lot of people like to look at UGA, and like I said, we're getting to the time of the year where it's on average, this commodity tends to do pretty well. So it's we have multiple other aspects of the market setting up in a more favorable way compared to SPY overall, and it's definitely worth noting, especially given the key level that we're at. So definitely keep that in mind. And a lot of people are wondering, all right, what is truly stopping the market from blasting higher? I know there was some news that came out today, actually, how GDP data was released, and it was decent. It wasn't anything amazing. GDP rose by 2.9%, which is good. That's definitely a good sign. The previous reading came in at 3.2%. So to see a 2.9% increase, it's good, but it's not as good as the last reading. But what kind of justified the somewhat positive price action off of this data release is that the market was only expecting a 2.6% increase on the GDP. So it slightly beat estimates, which is a good sign. But at the same time, it's not all sunshine and rainbows, because we all know that Jerome Powell is basically in a giant balancing act right now, where he's we need to slow down inflation, but at the same time, Jerome Powell does not want to crash the economy and send us into a brutal recession. So obviously he looks at inflation data a lot, but he'll also look at the unemployment rate and a lot of things like that, like GDP, inflation, jobless claims, all that good stuff, to see how much further he can increase interest rates and slow down inflation. And I'll tell you, with the unemployment rate being so low at 3.5%, and just how last week we had jobless claims come in very low, that gives Jerome Powell a ton of flexibility to really hike up these interest rates, So what's kind of scary is, we have the SPY right now at a very crucial resistance, and while we have all this economic data going on behind the scenes, what's scary is that we have Jerome Powell actually set to increase interest rates next week on February 1st. Right now, the market is pricing in a 99.1% chance of there being a 25 basis point rate hike. This is interesting because over the past couple of months, we've seen a lot of 75 basis point rate hikes. So it's rates are still rising. They're just not rising as fast as they were before. But what's kind of scary is the market is basically baking in with almost a 100% certainty of there being a 25 basis point rate hike. We sure as hell do not want a 0 basis point rate hike, or we just don't want rates to be flat, because inflation is still too high, and it's not time for that yet, right? It's just not time for that yet. But looking at the same time, if Jerome Powell says, you know what, looking at the unemployment rate, looking at the GDP data, looking at the jobless claims, and given that inflation is still relatively high at 6.5%, I actually think that we should increase interest rates by 50 basis points instead of 25 basis points. The market will not like that at all, and that'll probably send stocks flying to the downside. Now, this is just speculation, but it's Jerome Powell's main goal right now is slow down inflation without crashing the economy, and it's the market's getting very, very aggressive here, in the sense where it's trying to just picture the best case scenario, and it's not even pricing in, a decent probability of there being a 50 basis point rate hike, which is very scary. So basically what I'm saying is, come February 1st, while we still have SPY at this level, if Jerome Powell either hikes rates by 50 basis points, which, statistically speaking is unlikely, but even if he hikes by 25 basis points, but he sounds a little bit hawkish, or he's you know what, the economy isn't looking that good right now, I want I want to increase interest rates just a little bit more so we can really, restore price stability, aka bring down inflation, the market's not going to like that at all. So it's like February 1st will be a key date for the stock market, and I really do think it'll be a crucial pivot point. And to elaborate that on even more, not only will February 1st be important because of, like I said, with the rate hike, but we also have crucial earnings all of next week. So it's like if we look at the calendar, on January 31st, we have AMD earnings, we have ExxonMobil earnings, McDonald's, Pfizer, stuff like that. But where it really starts to heat up is on February 1st, we actually have Meta earnings as well. So that'll be a big report. And then on February 2nd, we have Apple, Google, and Amazon. That's a big schedule. And it's like literally between like January 31st and February 2nd, that will be the determining day, in my opinion, as to what's next for the market. Like, if Powell comes in very hawkish, I think it'll be very, very, very hard to see a true breakout above this resistance point. We might have to, stagnate for a couple weeks or even fall down. So it's like over the next, literally the next week, I think that's the main pivot point right here. And I think trying to play anything before that is really, really risky and not worth it. But we'll see what happens. But like I talked about just a couple minutes ago, there's other areas of the market that are actually seeing some pretty good inflows in terms of, just like money flowing into that area of the market. Like gold is a prime example where it's just been rocketing up, not even caring what the overall market's doing. And, like a couple minutes ago, I also mentioned, gas and how it tends to do pretty good in this season. I think it's really worth looking into some of these other areas of the market, whether it be GLD or GDX, maybe UGA with gas, or maybe even if you want to protect yourself a little bit, UVXY, which basically when everyone panics, this thing explodes up. So we could see with COVID, when everyone panicked and the market crashed, this thing went from like $112 all the way up to almost $1,400. And, there's a long history of UVXY spiking during times of mass fear. And UVXY, with it being so low right now, I feel like the risk relative to the reward is something worth looking into, right? In a good case scenario, you might own a bunch of stocks right now and be like, you know what, I just want to protect myself just a little bit, right? And you might look at UVXY, just for like a, maybe like a small call option play, or maybe like a small play where you buy some shares of it just as protection. There are multiple ways to capitalize off of a play on volatility right now, whether it be long UVXY or maybe even trading like VIX futures or maybe even like VIX index options. But in this example, we're going to just break it down in a, nice and simple way with UVXY. If you own shares of stock right now and you're looking to protect yourself and you don't want to do like a specific hedge on that stock, what you can do is you can just like buy UVXY, and if shit hits the fan, this thing will pop up and it'll at least give you a little bit of protection. But let's say, come next week and everything's all sunshine and rainbows and Powell's like, you know what, we're looking good. The market's not as bad as we think, and, everything's great, right? And Apple earnings come in good, UVXY will tank down, but at least you had that protection. And, if UVXY tanks down, your long, shares or calls or whatever they may be will most likely do very good. So the main thing I'm trying to say right now is the market is at a pivot point, and between right now and February 2nd, it will do nothing but just heat up. It's just going to be like, I guess you could say just like a spring, just being like squeezed and squeezed and squeezed. And then come February 2nd, that's when it'll just be like unleashed, right? So be ready for volatility. It's going to be a wild next couple days. And you have some very big catalysts all happening at once. Earnings will be a key thing to watch. Of course, the hike on February 1st will be key. And of course, you can't forget about this key resistance level on SPY. So definitely keep your eyes peeled going forward. If you liked the information in this video, make sure to subscribe. I post brand new videos every single day. Besides that, let's have an amazing end to the week.